Happy New Year's, everyone. Naeem Al-Obeidi here. We have a lot to talk about with Bitcoin hitting a new all-time high above 29,000. You can see we're coming towards that target of 30,000. And we'll talk about this blow off top. And by the way, I'm rocking this Traders Profit Club merch. It is New Year's, so I don't want to take too much of your time. But remember to like this video if you appreciate this content. And I'm going to talk about altcoins as well later in this video, because the big question right now is, did the SEC ruin this upcoming altcoin cycle due to the Ripple lawsuit in February? We're going to look into that. And remember, Ethereum CME future contracts launch in February as well. And what happened in our last bull cycle that ended the cycle for Bitcoin? What was it? It was the CME futures launching and institutions allowed to now short Bitcoin. We'll talk about all of this and look at Bitcoin's chart, but let's first and foremost dive into this analysis, because as you can see here with Bitcoin right now, we are now breaking out of the symmetrical triangle. This is a continuation of this breakout that we talked about yesterday, and in my opinion, this breakout has yet to hit the target of around that 30,000 US dollar mark. I have a feeling right now that we're kind of slowly creeping up, but at some point or another, we're going to start to see some momentum and a possible blow off top. One thing I do want to notate here is you can see as soon as we formed this initial new high, this volume came in and a lot of sell pressure came in comparison to that buy volume. When you start to see these big sell sticks come in after these large, these large buy orders, and then you see even larger sell orders, that is a sign of short-term weakness, at least on the hourly chart. But for the most part, we're above the weekly open, so things are still very bullish for Bitcoin. I still have that target of 30,000. I don't see a reason why we won't reach 30,000, especially as a psychological number. I think that that's a very, very decent target right now for Bitcoin. We still have these CME gaps down below at 23,795. If we were to come pull back, the first thing I'm going to be looking for is hourly closes below this weekly open. If we start to close hourly below this weekly open, then we have a possibility of coming and breaking down towards that CME gap to retest this ascending triangle that previously broke out right at that CME gap. And of course, there's a lot of confluence there with the CME gap and the breakout resistance, but there's actually more confluence down here where we've got this 50-day moving average, because this 50-day moving average is actually now above the monthly open, and now we have a little bit of room to breathe. If we do come down, we may not even come to test this previous breakout level, and this was the previous all-time high. We might come and test that 50-day moving average. Now we even have the opportunity to test this monthly open with the 100-day moving average. If Bitcoin is able to sustain these higher price levels, this will eventually move up, and then if that does move up, then there's that high chance that we test this monthly open at some point or another. And of course, the 100-day moving average is always going to be stronger than the 50-day moving average, and then that even goes even further when we talk about the 200-day moving average, and those do tend to move faster than you think, especially as we head into the new year. A lot of people will just kind of forget about it, and the next thing you know, the 100-day moving average is at that monthly open at 19,798, so we come to test that. But for now, that upside target is there. I don't see anything further just yet, but we will be doing a lot more analysis. And I do want to talk about our trade signals, because I had a member yesterday complain about one of our Ripple signals that we sent out, and because apparently they didn't take our course, they didn't know that once a target is hit, the stop loss becomes invalidated, because we expect traders to manage their risk properly and move their stops to break even once a target hits. So I do want to clarify that, and I also want to clarify how these sell stop orders work. This is Zilliqa. We sent this trade out yesterday. It hit all targets. I'll actually pull this up so you guys can have an idea of how this trade played out, and realize that when we're sending these stop orders, you are using either a stop limit order on Binance, or you're using an automated platform like 3 commas to be able to go ahead and enter these trades once price is reached. Because I'll give you an example here. For this Zilliqa trade, we sent this out at 4:13 p.m. And so if we go to 4:13 p.m., that's like right around this time before this broke down. The reason I sent this signal out was because I saw this specific level here at 77.30 find support once, twice, and 3 times on that exact same number. So in my opinion, is if we did cross that we would see at least several percent gains to the downside. Now, if we didn't cross that and we bounced just like what happened here, then that trade would have still been active and not yet triggered. And so when I'm sending these sell stop orders, if you want to enter before, that's up to you, but that's not necessarily the way those trades work, not especially those stop orders. And so when you're trading these, there's going to be different trades. Some say sell stop, some say buy stop, and some are just buy limits or buys. And so buys are immediate. Buy limits are the opposite of stop orders, right? Limit orders would be catching the rest. I'll go over that another day, but we'll focus on the stop orders right now. And so you can see with Zilliqa, as soon as that came down and broke, exactly what we predicted occurred, where we saw a nice 5% up to 8% gain in a few hours. And so that's the way we're trading these sell stop orders. Let's talk about altcoins, because the big question right now is, did the SEC ruin this upcoming altcoin cycle? When we look at the weekly moving averages for Ethereum, what you can see here is now we're starting to form a little bit of a more bearish wick here, but I'm not too concerned just because of this previous weekly candle. And so understand that I believe that with altcoins right now, it is a lot more fragile than Bitcoin. However, there's still a very good chance that we see this altcoin cycle, but we'll talk about what we're watching in order for this altcoin cycle confirmation, because I have a very specific chart that I'm watching for a confirmation of an altcoin cycle. But realize that we've got 3 days and 17 hours left for this weekly candle, and this could completely change and move to the upside. And I actually believe it will do that, and I've seen that happen quite often. But when we pull up others' dominance, here's really what I'm concerned about so far. But I really have some faith in altcoins and what's about to happen with Bitcoin dominance, and we'll go into that. And that's the fact that this weekly moving average, we've yet to test and retest this breakdown area. And so really what I want to see this week or next week is for this weekly candle to at least come up and wick here and test that level, just like we did here 3 weeks, within 3 weeks of this breakdown in August 2019, and that was the start to the altcoin cycle, right? And so, we'll give it 3 weeks. So far, it's currently in the first week. And so until we start to see that retest this weekly moving average is when I am going to be a little bit more confident about an altcoin cycle. But the SEC could have certainly ruined this altcoin cycle with this recent Ripple lawsuit, and a lot more investors are now worried about altcoins, and now they're possibly moving to Bitcoin. That's definitely a possibility. And just like Bruce Lee says, you want to be like water. You want to be nimble. You want to change with the environment. And so as much as we were hoping for an altcoin cycle, and if it doesn't come, that's fine. You just want to be nimble about it and change fast. That's what being nimble is, right? And so realize with Bitcoin dominance, though, we've yet to come up and retest 7302. That is a positive thing for altcoins, and that wouldn't necessarily be a negative thing for Bitcoin, because we could consolidate like what usually happens during an altcoin cycle instead of just seeing Bitcoin crash. Of course, if that does happen, all of these altcoins are also going to go down with it. And so Bitcoin controls the market, like Colin said on the interview with Charles Hoskinson, if you guys remember that. I do want to talk about international markets really quick. We look at the Shanghai Composite. You can see forming these new yearly highs, and that's actually across the board. You look at Japan really cranking, especially after Warren Buffett's endorsement. And then you look at even the CSI 300 in Hong Kong, you can see as well breaking out right now, new yearly highs. So that's a good thing for traditional markets. I think a lot of this has to do with the recent stimulus that was announced here, because when you look at the DXY, of course, now that the stimulus has been confirmed and they're actually, I believe, sending payments out right now, we're starting to break down from this very key level. And so a lot's actually happening right now on the last day of the year, and maybe not a lot of people are paying attention, but this is starting to come down and test the support. And remember that chart from yesterday? I had one guy comment on the video saying, oh, well, this chart really doesn't matter, blah, blah, blah. But you guys, you guys saw yesterday's price action. I mean, there was some bullish action, but there was also some bearish action. And so, this is really now testing the real true all-time high. Because look, remember, if we invert this chart, what we're looking at here is Bitcoin against gold. And the thing is the reason we're doing this is, let's say we look at the Great British Pound against the US dollar. What you can see is currencies have really been strengthening against the US dollar. So the US dollar is becoming a lot weaker than it was at the start of this year. And so when we look at a chart like the gold to Bitcoin chart, we're actually looking at a more reliable reference to what's actually happening in Bitcoin's price action, and whether or not we actually truly are valuing Bitcoin further than where it was valued in 2017. And a really good confirmation of this is if you look at this total crypto market cap chart, it actually looks very similar to this chart, not the Bitcoin to USD chart. So when you look at crypto market cap, I believe it's just total, and you look at this, you can see this looks a lot more like the gold to Bitcoin chart. So for those that are disregarding the gold to Bitcoin chart, I believe that that's highly ignorant. because you can see here, this is a confirmation that that's actually a little bit more of a legitimate chart when it comes to the crypto market and the total market cap. And just because not everyone looks at it doesn't mean it's not right. And I guarantee you institutions are looking at it a lot more than retail investors. Maybe that's why they're making money and the person that commented yesterday isn't. So other than that, thank you guys so much for watching this video. I believe that's all I wanted to go over today. Enjoy your New Year's. It's been a pleasure to be with you guys, and thank you so much for your time. And we'll see you in 2021. I really appreciate each and every one of you guys. It has been a pleasure to be back here on YouTube, and I cannot wait for 2021 to bring you guys the best and most reliable content. With that being said, snipers out.